Nike's down over 10% after earnings today, down over 10% year to date, and down over 54% over the past 5 years. They just reported quarter 4 earnings today, so let's break down if Nike's comeback story is still ramping up or starting to fall behind. So for a little bit of context, I own Nike. It's about 5% of my portfolio. In another portfolio, it's about 10%, so I own a good chunk. It's one of my top 5 holdings. This is a company, when you look at the financials, everything looks pretty rough. Revenue has declined, EBITDA has declined, same with net income, free cash flow, earnings per share. This company is in trouble. Looking at a 10-year chart, this stock peaked in 2021, and since that high, it's down about 65 to 70%, and after today's earnings, it's gonna be down even more. But there's a reason I'm making this video. There's a reason I own this stock, and there's a reason why I think Nike's comeback story just got a little bit stronger after earnings. So before we get into the actual report, the numbers, what stood out, we need to look at why has Nike fallen 65%, 70% from all-time highs? Well, first, this story starts in 2020 when they hired a new CEO, John Donahoe. He was an outsider with a tech and consulting background. He tried to come into Nike, take his experience, which he had good experience, but did things that weren't gonna help Nike. He tried to go way too tech heavy with Nike, come out of retail stores, put it all into Nike Direct, so the Nike app just online, and this ultimately failed miserably. On paper, his plan seemed right. If we get rid of the middleman, the retailers, and everyone buy from us, margins are gonna explode. The number one problem with this was they did this transition way too fast, got out of retail stores way too fast, and basically just hurt the relationships they've had with these retailers. One, they were leaving shelves rapidly. This was allowing competitors like On Running to take up space, so when you go shopping, you're seeing less than Nike and more of these competitors. Number two, they were doing heavy discounts. There were 2 reasons for this. The first one was they wanted people to go on the Nike app, so instead of going to a store and buying the Nike products, you would go to the discounted products on Nike stores. Well, because retailers wanted people to buy the Nike products as well, the retailers would discount Nike products. In order for the Nike app to compete, Nike also had to discount those products. So eventually we just had the retail stores and Nike Direct having a race to the bottom to see who could be cheaper. This absolutely killed margins. Another thing that played into the heavy discounts was inventory. They had an inventory problem during COVID and just had way too much inventory, and to get rid of this, they had a discount. So ultimately, profit was destroyed, revenue was getting destroyed. When we look at this time period, revenue was growing incredibly slow. And with Nike, we look back, they're a company that continuously grows at about an 8% to 12% pace each and every year. So that obviously didn't happen, and it kind of screwed them. So we look at these 2 major problems so far that CEO John Donahoe made. And another one was they kind of just left their identity. They were no longer about sports. They had a more sneakerhead culture. So now people didn't like this, continuing to hurt Nike's reputation. And then a macroeconomic thing that killed them was inflation. If you guys know, back in 2022, inflation was at record levels. Now Nike sells to the masses. And what I mean is Nike is for everyone. It is not a premium brand per se, but you can see anyone on the street, regardless of income level, wear Nike. Now, Nike still is a little more expensive compared to, let's say, a Target brand, a Walmart brand, but it is still for the masses. So when inflation hits you heavy, the masses, the majority of people are going to stop buying that $60 sweatshirt, $80 sweatshirt, the $200 sneakers, and they're going to find alternatives. Nike products are not a necessity. So in 2020 to 2024, we saw John Donahoe take over this company and do a terrible job. Mistake after mistake, taking Nike away from what made it great, losing them money. And then 2022 with inflation, it hurt the consumers even more. This was a complete disaster, eventually leading to this big decline Nike has had over the past 5 years. Okay, but why now? Why Nike? Why am I investing in Nike? Why am I making this video about this report? Well, it comes down to the new CEO, Elliott Hill. Elliott Hill has been with this company since 1988. He started as an intern, then worked his way all the way up to being the president, and eventually retired in 2020. He came out of retirement in late 2024 to be the CEO and help this turnaround happen. Now, I don't know if this is official, but there's a lot of speculation that he was in running for CEO back in 2020, but they ultimately went with John Donahoe, and he decided to retire. Obviously, there was no payoff to that. It went terrible. And they came back and called this man's name. Now here's what's important. In 1988, Nike was not the Nike it is today. Nike was still building up to the brand it has become with Phil Knight. He was with Phil Knight. He was with Nike for over 30 years, seeing what made this company great. Everything Nike became, he saw. On his first day of the job, he had 2 things to say in his presentation. The first is we are a sports company, And second, we are a growth company. His number one thing right now is return to sports. Like I said, the problem they had was they were turning into more of a sneakerhead culture, not a sports culture. Nike is ran by the athletes. Elliott Hill is refocusing his strategy on these key pillars. The first is sports first focus, like I said. This is reorganizing structure around specific sports, so running, basketball, to enhance product innovation and relevance, moving away from broad lifestyle focus. The second one is innovation and product. Reigniting core franchises and developing new tech, tackling the reliance on legacy sport products. The third is marketplace balance, repairing relationships with retailers like Amazon and other wholesalers to ensure better product availability and distribution, reducing channel conflict. That's another key point. So Nike was with Amazon all the way up until about 2019. They left them and just recently got back in with Amazon. That was a key relationship they focused on fixing, and it's already happening. Okay, the next one is culture and teams. Reconstructing internal, streamlining operations, and implementing cost-cutting measures. And then finally, we have marketing and storytelling. Re-anchoring the brand in athletic intent and human emotion, re-enhancing brand distinction. So that's Elliott Hill's plan. That's his comeback plan. That is how he wants to get this company back to all-time highs, back to the great company it once was. Now, before I get into the actual report, we need to remember something. Nike is still a great company. You turn on TV, all the best athletes in the world are wearing Nike. We have Ohio State, the champions of college football last year. They have Nike on their jerseys, and they use a Nike football. You look at one of the NBA's greatest players, Nikola Jokic, and he's got a Nike swoop on his jersey. You look at Shea, Nike on his uniform, and he's a Converse athlete, which is part of Nike. You look at a picture with some of the best players in the league, and they have Nike all across their uniforms. You look at NFL MVP, Josh Allen, he's got the Nike swoop right there, and then this Chiefs player has a Nike swoop right there. You turn on TV, and regardless of what brand these athletes are with, all their highlight reels, they will have that swoop on their jersey. You look into golf, you have Rory McIlroy, you have Scotty Scheffler, all these great athletes are with Nike. You look at Caitlin Clark, the face of the WNBA. She is with Nike, her brand is coming out, her shoe is coming out. Whatever you want to say about Nike, whatever you want to say about the brand, the best athletes in the entire world are representing that company. Okay, so let's get into the numbers. Let's get into this report. The first thing I want to highlight is revenue is growing again. This quarter, we saw revenue at $12.43 billion. That's up from last quarter, and we see that decline has stopped. When we look at the trailing 12 months, now this has not been updated. Qualtrim has not been updated, but Nike was slowly rising. You know, it was nothing. This was during John Donahoe's time. And then Elliott Hill had to take over, and everything had to get worse before it got better. That's what the thing was. Everything has to get worse. We have to fix all the bad stuff that has happened in order to get better. Things are going to get bad. Things are going to look rough, but we don't care. This is what we need to do. And that's what we saw. We saw revenue decline quarter after quarter, quarter after quarter. And right here is when they broke even. And then this quarter, we see a re-acceleration. Revenue is growing again. But like I said, they're in the things have to get worse before they get better territory. And that's what we've seen. Things have to get worse before they get better. And we see that with net income. You see there was a sharp decline, and now it's starting to bottom out, and we're seeing that turnaround. You look at EPS, same thing. Now, like I said, these charts have not been updated, but I'm going to show you the direct numbers of how everything is starting to rise again. Okay, so let's look at my key takeaways. So first off, revenue is starting to stabilize. Revenue, like I said, is $12.4 billion, which is up 1% year over year. If we're going quarter over quarter, it is up a lot more. The Nike brand revenue is up 1%, and this shows Nike has stopped the decline and is stabilizing the business. The second, this one is a big positive, a hidden big positive, is wholesale, the biggest positive surprise. Wholesale revenue is up 8% year over year, growth driven by North America, and this confirms Nike is repairing retailer relationships. Like I said, this is a big thing that Nike did poorly. They hurt their relationships with retailers incredibly poorly, and that was going to be a critical step of getting this company back on track, and we're seeing that now. Next up, we have North America. This is what's driving the comeback. North America revenue is up 9% year over year, and there's just footwear, apparel, and equipment all growing, and Nike's core market is healthy again. Historically, Nike has recovered the US first and globally second. The next, direct to consumer. This is still weak, but on purpose. So Nike's direct revenue is down 8%, with digital down 14% and owned stores down 3%. But Nike is pulling back promotions and resetting pricing power. Like I said, things are getting worse. Short-term pain for a long-term margin recovery. Now we can talk about China. China still remains the main drag. With the Greater China revenue, it's down 17% year over year, with footwear down 21%. This is still weak. This is not fixed. But the good thing about this is, a good takeaway we could take is, expectations are very low. They are very low for China. So once we start seeing just any stability, not even breaking even, it is going to be upside for the stock price. Stuff like this is already priced in. So any signs of stability are going to be good. Next, we have margins. They fell, but not because of demand collapse. So gross margins were about 40.6%. That's down about 300 basis points. The main reason is higher tariffs in North America, but this is not a sign of brand weakness or discounting spiral. Next, we have the inventory improving. This is an underrated positive, and like I said, inventory was a big problem they had and a big reason why they had a discount, which killed margins. So inventory came in at about 7.7 billion, which is down 3% year over year. So we have lower units, which are going to equal less forced discounting ahead. This is huge. Discounts are going to kill margins, and that's the one thing they are trying to get rid of. Ultimately, like I said, this is going to set up cleaner future margins. Then we have costs are under control. So we have selling, general, and administrative is up only 1%. Operating overhead is down 4%. Right now, we're seeing Nike cut inefficiencies. They are not cutting brand investment. And again, EPS looked bad, but this is a turnaround quarter. And year to date, year over year, it's down 32%, which it actually grew quarter over quarter. So that's a big positive. That's a big thing in the comeback story. So even though year over year, it looks poorly, it is starting to turn around, bottom out, like we said, we need to see. And then ultimately, the last key takeaway was management confirms the thesis. Elliott Hill, the CEO, said we are in the middle innings of our comeback. This statement aligns with wholesale recovery, inventory cleanup, and North America strength. So Nike tomorrow is going to open up low. Down 10% year to date is going to turn a lot worse. This stock is down below $60 a share, but what we saw was another quarter of this comeback story turning around. Here's the thing with investing. You don't know how the market is going to react. You research a stock, you buy a stock with the expectations of making money. Sometimes that happens in a month, sometimes 3 months, 6 months, a year, sometimes 2 years, 3 years. Sometimes you're just too early and you don't know what's going to happen. Now for me, Nike has been a pretty stagnant, not a great investment for me. But luckily this year, I've had some great investments help me out, like Google and ASML. Would I have loved to see this stock rise after this earnings report? Of course. But you know what else I love? I love being able to buy this company at a cheaper price. Now, there's one thing you might say is, what about valuation? Valuation doesn't look cheap. Well, like I said, earnings per share is in the dirt, and this is on purpose. So of course the PE ratio isn't going to look great when they are tanking earnings per share on purpose. So valuation isn't even something to look at. You can look at price to sales at a 2 right now. That looks much more reasonable. But again, in the stock market, there are times when people just see headlines. They see revenue up 1% year over year. They don't understand Nike and think this company is dying. Think they had a poor earnings report. But when you look into it and realize this comeback story is continuing to strengthen, continuing to ramp up, down 10% after earnings doesn't make sense. If anything, you could say the stock could be up 5 to 10% after earnings, not down. Another thing to point out is this company pays dividends, and they rose dividends again just about by 1 cent this quarter, but that is still rising. We've seen that continue over the past 5 years. We see them continuing to buy back shares, which is always a great sign. It's a sign that leadership understands this business is growing. This business is looking to complete this comeback story. But those are my thoughts. I broke down why the stock dropped. I broke down the comeback story, the plan, why Elliott Hill is going to get this company back on track. And I gave you the numbers. I gave you the Q4 numbers of why this stock is completing its comeback story. Like Elliott Hill said, they are in the middle innings. Now, it's always up to you to figure out whether you're buying a stock or not, to do your own research, because this isn't financial advice and should never be taken as financial advice. But personally, I am thrilled with these results. These are results that are going to make me buy the stock in the coming months and continue to build out a position. So in 2 to 3 years, this investment looks successful. Now, Nike has to continue to execute. Now, we've seen continued execution, but they have to keep doing that. They have to keep innovating. They have to keep growing revenue. All these numbers need to keep looking better. But I'm happy. I'm happy with the results. I'm happy with the numbers, especially wholesale revenue growing, North America revenue growing. And yeah, that's what I have for today. Nike is a stock I own. Nike is a stock I continue to plan to buy. And that's all I have. I hope you enjoyed this video. Like I said, this is not financial advice and should never be taken as financial advice. This is for educational and entertainment purposes only. You should always do your own research before buying a stock. And that's all I have. If you enjoyed this video, if you found it valuable, let me know in the comments. Comment something in the comments so I know you stayed till the end. Drop a like if you found it valuable, and I'll see you in the next one.